Alright, guys, so let's talk about the legacy of Janet Yellen today. Let's dip our toe into the Twilight Zone. Now, we know Scott Bessent is coming to replace her, but she's still the head of the Treasury, which means until January, Yellen still has the power. That means financial sanctions and helping Biden borrow a ton of money for the US economy. And it's time to realize how bad things have become. And the first bombshell Yellen dropped was $20 billion to Ukraine. The US Treasury has transferred 20 billion backed by the frozen Russian assets. Might we remind everyone how horrible this move is? It undermines trust in the Western financial system. Now, the loan will be paid for by the windfall profits earned from the Russian reserves, and this confirms quite a few things that the West is at its limit to raise money for Ukraine. It's impossible, virtually impossible, that Yellen doesn't know the repercussions, the backlash and de-dollarization this would unleash. Trump has also hinted he's going to reduce funding as well in 2025. So Western economies, they are sounding the alarm bells. The loan to Ukraine backed by Russia's assets tells us everything that we need to know. According to Janet Yellen, these funds, paid for by the windfall profits earned from Russia's own immobilized assets, will provide Ukraine a critical infusion of support. Now, there are two big problems with this move. By backing the loan with Russian money, Yellen is going to make things even harder for Trump in 2025. What if the Russians want the money back? And will the US borrow money to repay the Kremlin? Secondly, Biden is also moving to forgive $4.7 billion of loans given to Ukraine. And this is a very bizarre move that Congress is most definitely going to block. Ukraine probably can't pay it back, so chances are it's going to come out of the frozen Russian assets again. Of course, Moscow is furious. If we read the Russian response from their foreign ministry, it confirms a counter seizure is going to happen. Putin could seize more Western assets on Russian territory, and they'll use the assets to enhance industrial potential and implement infrastructure projects in Russian regions. And despite what many of us think, many Western companies still have fixed assets stuck in Russia, hundreds of billions worth. Now, Putin issued a decree back in May that gave him the mechanism to seize US assets within Russia itself. And considering what just happened, we can expect for a big shock, a big response down the line. But it's important we take caution. Punishing Russia sounds very convenient, but we are now at a tipping point of economic history. Trump is coming back and is bringing a trade war with him, and that will be raising barriers and decreasing trade with the world. The US wants to lower the deficit, and since 2020, the US has been importing a lot more than their exports to the world. The trade deficit has been growing, and this is an important point of consideration. It means dollars from US importers are flowing out to other countries, and this can be China, India, to the EU, and to Mexico. And you need a constant outflow of dollars to keep the modern economy working. Emerging markets need the reserve currency to buy almost everything else, and the excess money is then stored as reserves. In September alone, the US trade deficit hit $84.4 billion. In other words, the US exported $84 billion worth of paper currency to the world, and a big part of that gets recycled back into US assets. Countries and companies, they pile billions of dollars back into US bonds, real estate, and of course the S&P 500. The bigger the deficit, the better it is for US asset prices. But this could reverse. If the deficit collapses and US exports go up, the world would be drained of dollars. The currency will also strengthen. Now you add in this confiscation of Russian assets, you have a recipe for disaster. The world already faces a dollar shortage, and if they invest in the US, will the money get confiscated? This is the big question. So you can see how tricky this situation is. And let's not forget, back in July, Saudi Arabia, they won the G7 over the Russian seizures. They could start dumping EU debt holdings in retaliation. Now this could be just blustering for sure, but it's a clear and present danger. Global central banks, they are not stupid. The perfect storm of asset seizure plus Trump's trade war could really force them to diversify away from Western assets. The supply of dollars could dry up and no one wants their money to be confiscated. So Yellen's legacy, her plan of sanctioning Russia, It's going to have lasting effects on the US economy. It's going to make it harder for Washington to raise money, especially when China themselves are issuing their own dollar bonds. A paper done by the EU themselves found that the seizure is horrible for the US. It will lead to an increase in interest rates of 90 basis points, almost 1 full percent. The higher interest rate payments would outweigh the amount of seized assets just after 2 years. And this is something we have said many times before, and now the EU themselves have confirmed our speculation is not just worth it. It's not worth it. You will just damage Western economies. At the end of the day, you will be paying more. The asset confiscation was bad enough, but let's go down the rabbit hole here. In a bizarre twist, Yellen just did the unthinkable. She actually apologized for not managing the US fiscal deficit. And now, all of a sudden, she says the deficit has to be brought down because of higher interest rates. Now, mind you, this is the same person who said inflation was transitory. And just before the '08 collapse, she also said everything was fine and there would be no recession. And this is my personal favorite. Back in 2017, she said US banks are very much stronger and another financial crisis is not likely. Now, we all know how that story ended. Banks like First Republic and SVB collapsed like a house of cards. There were multiple bank failures, so almost all of our predictions were wrong. But her apology is extremely disingenuous because she wasn't fighting the deficit. She was adding to it. She was adding more burden to the national debt. And this is even worse than the dollar sanctions on Russia. The higher the national debt goes, the closer the US bond market, the entire economy gets to an eventual default. We'll reach a point where the interest payments become the biggest line item in the budget. And let's pull up a few charts from Zero Hedge to quantify the insanity. Now, just in October and November alone, the US national deficit hit an insane $624 billion, and that's the worst start to a year in the entire history of the US. It's a travesty, it's a tragedy. Even the spending in 2020 wasn't that outrageous. And this is what happens when you are funding two wars, fighting China's economy, building bases everywhere, and making big government even bigger. You start spending money like drunken sailors, and it gets even funnier. During Yellen's term, I don't think you can use the words fiscal sustainability here. During her oversight, the debt flew to the moon. During her term in the Federal Reserve, the debt rose by incredible $6.8 trillion, and this was bad enough, but at least interest rates were well below 1% then. But just look at the period starting in 2021. When she became Treasury Secretary, it's as if she lost control of everything. Despite interest rates going from sub 1% to over 5%, she borrowed over $8 trillion. Now, this is crazy. And in total, our best friend issued 42% of all US debt ever sold. That is an explosion of the money supply because the US government spends it directly into the economy. Now, Yellen, of course, would say the national debt is under control, but once again, we have to challenge her on this. The longer rates stay high, the bigger and the further out the interest payments would get. So Yellen didn't manage the debt well, and even Drunken Miller scolded her on that as well, that she made the biggest blunder in history. Yellen should have borrowed more money in advance when rates were low, and now that rates are still well above 4% across the curve, the US national debt is screwed. Every dollar borrowed is now incredibly expensive. The interest payments are a very big issue because we know the amount will be borrowed into existence. Whether it's the Biden administration or under Trump, it's the same old playbook. According to the CBO, the total deficit will only continue to grow, and the projections are really very conservative here. By 2034, the total deficit would hit 6.9%, and interest payments alone would grow to an incredible 4.1% of GDP, or 1/6 of all federal spending. So it's just one big doom loop. It got way worse under Biden, and Trump is trapped on a hamster wheel. So Trump is going to face a mountain of challenges. He wants to revive US manufacturing, and that means a ton of tax incentives which will blow up the national deficit even more. And if Trump tariffs the world and imports into the US falls, tax revenue won't go up, it might actually stay flat or even drop. Tax incentives are also going to drain government revenue as well. So the shortfall will have to be borrowed from the world, and it pays to also consider the current economic climate. De-dollarization is accelerating. So demand for US bonds as reserve assets would continue to fall. China's issuance of dollar bonds is also competing with the US for money. November's inflation shows an increase of 2.7%. Inflation is sticky, and that's going to push the Federal Reserve to slow down with their rate cuts. In December, we could only see a 25-point decrease. Worst case scenario, the Fed might even halt the rate cut. And this puts the US Treasury in a very impossible situation. How much more money can they borrow? And make no mistake, Trump's vision is going to cost a lot of money to execute. And here's the base case scenario. By 2034, the Fed funds will hover around 3%, and that's the short-term borrowing rate. For the longer-dated bonds like the 10-year, interest expense would be even higher. The yield curve will normalize, but that means the 10-year yield would stay at around 4% for the long term. How can he reduce the deficit with debt? He could fire government workers, sure, that's the Elon Musk plan, right? But is that even feasible? If federal workers they lose all their jobs, that would crater consumer spending. So you can see the dilemma on display. Biden's 4 years were disaster and he handed a basket case to Trump. Even if the new White House wants to do things right, they can't stop this runaway train. The problem is finding new creditors willing to lend money to the US at a reasonable rate. And here's who owns the current pile of US debt. Domestic holders accounts for 79% of total holdings. And this includes the Fed, mutual funds, banks, pension funds, and small investors. Only 21% is held by foreigners. Trump needs to find a way to increase this portion of debt holders, because if all the debt is held by the domestic players, it becomes another Japan situation. But in America's case, the yield is going to be forced higher than normal. Going protectionist is also going to make the argument for holding US debt even harder. Now, I wish I could say there's an easy way out, but I don't see a scenario without extreme pain. The only way to avoid a default and runaway inflation is to embrace a recession today, stop spending. And maybe it's time to let the house of cards collapse and we all go through a recession. But let me know what you think. Is Yellen being sincere here? Do you accept her apology? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.